we can very easily identify moves using the MACD here on Facebook. And we can identify where it told us to go short and where it told us to not be short anymore. Where it also told us to go long and told us to not be long anymore. And what you're going to find with this indicator and any other you might use is the reason behind why I don't like those terms like, oh, well, the stochastic says that's overbought or oversold. Let's think about what an indicator actually does. What does that indicator do? Anybody? Yeah, good answer. It lags. It's not going to start pointing up until the price starts going up. And then you could say, well, you could use the tricks. That's another indicator. Have you ever noticed how the tricks points up and you're still following down and you're like, okay, I guess I just got to wait for it to start going up. By the time it starts going up, your tricks started pointing down again. Well, son of a gun. One thing you'll find here as you go through the MACD on Facebook's 60-minute chart is that all moves under $2, all moves on the stock that were under $2. Now let's think about it. Options is a game of $1 moves, isn't it? Options is a game of $1 moves. And with that game of $1 moves, I do well when I get at least $1 move. But see, the problem is with Facebook's 60-minute chart and the MACD, on every move under $2, which is still a playable move for options, I get a break-even trade or a loss. And that's one thing I'm really not happy about with the MACD on Facebook's 60-minute chart. The reason I say that is because even though it might have been a small win with something else, it would have been a what? Sometimes it doesn't matter if it's a big win or a small win, but I would like it to be a win, right? The other problem I found was on moves that are over $2. In the majority of those cases, it gets me closer to half of that move. And I would really like to find something that got me at least 75% of that move. You know, you think about it. If a stock's going to move $10, wouldn't you like your trading system to get you at least $7 of it, $8 of it, as opposed to 5? And as I've gone through the chart using the MACD, and the reason I'm still, as some would say, wasting time by talking about it right now, is for you to see the correlation with the different buy and sell signals, and how where there were some good trades on it, and how, unlike our study on it with Apple last week using the MACD, where it was horrible on Apple, it can produce some rather productive trades. Although it's only going to seem productive on the big moves. And to kind of get you to think for a second, how many times do you know the big move is going to be a big move before it happens? How many times before the move happens are you so sure it'll be a big move that you would give up your firstborn child for it? And that's the other thing too with some of your commissions and stuff, dog. If on all the trades that are under a $2 move, it's at best breaking me even, a break even, whether you're trading common stock or options, is actually a loss, isn't it? Because break even on price means I still got to owe somebody for the trade I made. I had to pay them to make that trade on my behalf. Now, moving over to something else that if you watch the focus group video on Facebook's 60-minute chart, we talked about easily referencing the 21 SMA. Easily referencing the 21 SMA on your 60-minute chart to assist you with the direction of the trade. And to be quite honest, I wouldn't really ditch that. But what's the proper way to trade a moving average? You know, a lot of places would tell you that, well, that's support or resistance. And I would say they don't know how to trade. You might want to never follow them again because they don't know what they're talking about. If it was support or resistance, I wouldn't have these wicks below it here. I wouldn't have come above it here, even though we stayed below it overall. Just like those indicators, it moves with the stock price, right? In this case, a 21 simple moving average gives me the average value of the last 21 candles closes. But how do we want to trade based on a moving average? How do we want to trade based on a moving average? Anybody? Direction of the line. So if we're talking about options, if line is curled up, what type of trade do we want to be looking for? And if line is pointed down, what type of trade would we be looking for? And if line is pointed sideways, what type of trade would we be looking for? Thank you for saying none and not strangle or something. Remember, with options, unlike stock trading, we're not just arguing or fighting against the price of the stock, we're fighting against time. Sideways moves are not good for options. Now, if we looked at the 21 simple moving average, we could see that there were opportunities as the line pointed down. You can see actually in this chart, right where it started to curl down was on the second candle or third candle shown in this chart. You could have entered on any one of those candles, couldn't you? Oh, it came back up, but it still curled down. It came back up, but it still curled down. You could have entered. But the is if you didn't enter right when it curled, you should probably do what? If you didn't enter right when it made the curl, you missed it. You shouldn't do anything. Now, if you were going to trade on that alone, how could you ensure that you'd be less likely to miss that curl? Kind of goes back on the things I preach day in and day out. Well, not necessarily stare at it, because if you're looking at a 1 hour chart, it's going to take more than one of those candles to actually make it curl, right? Well, with Thinkorswim, you could actually set alerts based on moving averages. But let me ask you this. There's over 30,000 publicly traded companies. Can you watch them all? Can you, well, you might be able to think you can watch them all. Can you trade them all? Yeah, the first part of designing your watch list and the stocks you're trading is asking yourself how many trades you can actually make. And I've proven time and time again that you could follow just one chart and make lots of trades. And I'm not just saying make lots of trades and them go nowhere, but be successful making lots of trades. Yes, there will be losers in there, but the overall body of work would be a success. And isn't that what this is all about? As if 3 months from now I've got more money than I have today, and 3 months after that I got more money than I had 3 months from now. Now, if we use the 21 simple moving average, the big question on how are we going to be able to catch it and make sure that we get in it when it does that? Well, if Apple's one of the trades you're planning to make, I suggest, every hour or two, you watch Apple. Take a look at it. What direction's that line pointing? Now let's actually go through real quick. We can just kind of mark using that 21 SMA, and sorry, this is Facebook. I said Apple. We're going to go on the first candle that the curl down happened. I want to make it so everybody can see it. So we're going to zoom it in. And this is the hardest part about trading a moving average. Is when that started actually curling down, it may not have looked like you were getting a good buy. And in many cases, it might go back up again. What do we have to make sure happens before we make the buy, though, to make sure it's going to start curling down? We have to do what? We got to let one thing happen, and what is that thing? Yeah, you got to let the candle close. You don't need to look at any other chart. We're talking about the 60-minute chart on Facebook. But with any system you're using, you have to have a confirmation in your system And I'll tell you what, many times you're like, well, I'm looking at the 60-minute chart, looks like it could fall. I'm looking at the 15-minute chart, looks like it could go up. 5-minute chart looks like it could go sideways. Oh, what do I do? You study the chart and you trade what your studies have told you to do. And if you're going to trade as accurately as your studies, you have to do what? Make all the trades, right? If I do a study and it says that, wow, if I use that trade system in the past, I would have won on 8 out of every 10 trades, just throwing a number out there. But yet I only make 1 out of every 10 trades that it tells me to make. If your luck is anything like my luck, and if you depended on luck, chances are you're only going to catch the losers, huh? Where would this trade entry be sold at? Would we sell it here when it comes all the way back up almost to where we, I mean, shoot, look at that. That's a big move up. Do we sell that here? Is that where we want to sell that at? What do you think? It just moved up. All right, but if I would have sold down here, I wouldn't have had to hold it through all of this, right? If I sold right here, man, I'd be like, you idiots held. But if I sold there, I would have never seen this, right? Now, if we bought puts with a closing price of 67.34 and sold price of 61.21, would we have made money on that trade? Well, so if we were tracking wins and losses, trade number 1 is what? Winner. Now, if I sold here because the 21 SMA started to curl up, what did I need to buy? Yeah. So the closing price on that buy would be 61.21. And I'm not actually curling down until right here with a closing price of 59.48. That one would have sucked, right? But it did tell me to buy puts, didn't it? Okay, I got out of calls. I had to wait through all that drop based on this trading system. Remember, we're not talking about creative ways to manipulate a trade system. We're talking about ways to study and then trade a trade system. So here at this same price, 59.48, I would be buying puts. Sad thing is, that line didn't point up again until here. What kind of trade's that one? And that's a loser. That's what that is. And then if you bought here because it curled up and you waited for it to curl down, which was at the close of this candle, what kind of trade did you just make? Another loser. Now, like Jerry said there, as offhand, I see it doesn't turn fast enough. And that is a predicament. And you could throw the 8 simple moving up there, and you can actually find that it turns too quickly. Because what actually happens with the 8, oh crap. And that's why in the focus group video that I have for Facebook, when we talk about the 60-minute chart, we actually talk about using it as a reference, the 21 simple moving average. And I want to talk about what I mean with that reference. Now, just so you know, trading on the 21 SMA alone, well, in the next morning when it gaps up. Some charts are very, very good with moving averages. Just thinking off and free. What could we they work very good. with calls. Now I've also made new swing points, haven't I? I made a new swing high and then I had the swing low down here. What I really like to see is, first off, I hope it doesn't make a higher high. But then when it goes below that line, it's lower low time. Can I stay in the trade? Yeah, look, I'm still going almost straight down on that darn moving average. And I come here and I come up to this one. At this point right here, do I need to sell? Sorry, right here, do I need to sell? No, I still made a lower high, right? But then I come down here and oh shoot, starts to bounce, but you can have a green candle in a downtrend. But what told me that I might want to sell here? Not necessarily that it made the higher low, but that the higher low made me move my swing point to a higher high. Now remember, you don't know what's going to happen after that. Right now, because of how my chart's zoomed, oh wow, it dropped right after that, coach. But what did your 21 SMA say? Did my 21 SMA tell me to sell it? It said, listen, you're still in a puts trade. That swing point there got taken out because it was broken here. But then this one gets taken out because it got broken. Then what happens? I come and make a lower low from here. I make a lower high. Hey, this is pretty good, right? Cool. I didn't get out too early. My validation, my confirmation said I could stay in it. I make the lower high. I come back. Okay, might need to watch this. I just made a higher low. When I make the higher low, the prior swing point here, do I need to hold this at all? Do I need to worry about, well, that curling up. I did have a higher low. This candle closed, and now my line's pointing up, and I had a higher low. I would, on this candle right here, the one that came up, even though it didn't cross the swing point, it moved my 21 SMA. It went from going down and then sideways through here to now on this candle pointing up. That's time to do what? That's time to be like, that's a winner, y'all. Let's party like Charlie Sheen, right? Now, here was a low. My line curled up. I exited my puts here. And now I've crossed the swing high here. What can I do? Yeah, take the calls. It's validated by my confirmation of the 21 SMA. Well, look at how long that trade took to make. It went from March 21st to April 1st. You'd want to be 3 weeks out, yes. Now, if we look at this one, we make the break. We start kind of consolidating here. We get a new swing point here. Now, this is where some of you might need to consult my actual swing points lesson, because it'd be the only thing that'd save you in some of these trades. If you guys remember the lesson I did on swing points, and it's on the website, there was one thing in particular I talked about that, regardless of any other confirmation, if it fails one line, that's okay. If it fails 2 lines, do what? If it fails 2 lines, no, I never said sell, actually. When in doubt, do what? When in doubt, leverage. No, I'm saying you'd be in this one. You'd have bought this one right here. Closing price 61.80. Okay, you get a little consolidation. You come up, you make a new swing point. Ooh, failed a line. Ooh, now my puts are down, or my calls are down. I failed 2 lines, didn't I? 2 lines just got failed. This line and this line, right? Or am I crazy? At this point, what's my 21 SMA doing? Sideways. Now, if I'm only trading on the SMA, I don't want to enter a trade that's going sideways. But if I've got calls and it hasn't curled down yet, which means it's not telling me to sell, this is where I would take the leverage position. No, I didn't mean to delete that line. That one needed to stay because that was the overall low. And you see, as we failed this line, we come down, we fail again. Look at what it took to actually curl the moving average down. It's a heck of a fall, isn't it? Now, when I make a strangle trade, and I know it's hard for newer traders to really understand this, but what's one thing I always say about strangle trades? What do you got to be willing to do? The second you enter a strangle trade, you have to be willing to lose 100% of one side. How from what we've talked about? There's a lot of funny things that can happen in 3 weeks, by the way. As we make this failure here, we fail the swing low. Yep, that moving average is saying it's a puts buy all the way. But because we were in the calls, we bought the puts when in doubt. We get a swing low point. We get a high point just on the consolidation. We get a nice enough drop to give us another swing low point. One thing that even I myself have to is I have to worry about watching the winning side, not watching the losing side. You ever do that with a strangle you're in? You're so focused on watching the loser go down that you're not watching for where to sell the winner. Let me give you a little tip. Once you determine which side's working out better, that's the side you're actually trading. The other one's just you're willing to take 100% loss on it. Now, let's kind of look at something. Yes, we're in a strangle here, down at this point. But what happened right here? From down here, and it makes a move. How many lines did I break through? Yep. Now, me personally, I view puts the way puts were designed to be viewed. They're actually not a device of profit. Can you profit on them? Yes. But because they were never intended to profit on, yet to leverage positions or kind of like having insurance on positions, they don't trade quite the same as the calls do, which calls were designed to profit on. When I'm in doubt on a puts play, no, Jerry, those two lines were from right here. To progress it, you'll see a little better. I marked the lines right here. Now we're right here. On a puts play, because puts were never designed to profit off of, yet to be used as leverage, this is where I exit leverage. See, I will always leverage on a two-line failure for a calls play and exit the leverage on a two-line failure for puts. But let's go with using the confirmation of the 21 SMA as well. If I was going to do that, I broke above two lines. If I wanted to hold the puts, I have a calls entry right here. We come down, we don't fail two lines. We start moving up, we make another swing point. By the way, let me get rid of these. Make another swing point here. We pull back, we gap up. Now I've got a couple of things to look at. I already had reason to buy another call trade here. I was still holding another call trade and I still got a week and a half on it. I don't want to just hold that trade and say, well, I can't buy calls because I'm already in one. Why? What is this call trade here? The one that failed there. That's meaningless, right? It was the losing side of a strangle. If it comes back, it comes back. But if the chart said make a new calls trade, we got to make a new calls trade, don't we? That's why we bought calls here. And then, crap, it gapped up. And when it gapped up, the 21 SMA was curling upwards. Well, we've crossed the line. We can sell the puts. And you know what? Those puts are actually about $1 from what the price was when you bought them. Now, me personally, when using swing points, I always exit puts on a two-line failure. But with calls, I leverage. If I'm in calls and it fails two lines, I leverage on a two-line failure. It's hard to explain why I do it that way. You'd have to trust that after doing a whole bunch of trades, I just found that to be the better way. Either way produced a win, and I'm actually holding two calls plays at this point, which if I bought a calls play here 3 weeks out, and I came up and I retested my prior swing point, stroke of luck, I wrote that off as a 100% loser. As soon as that one pulled back, I just need to take advantage of that loser, right? Because that's all that one was, by the way. Now, as you progress with using the swing points, I wouldn't want you to fully depend on the 21 SMA. Because that 21 SMA can have you a little bit late to the party to enter if you're only waiting on that. The way to use the 21 SMA so that we don't have to go through a full 90 days of the charting for you to see it, is simply on your exit points for if you were to break above or below one single swing point. And I'm sure that just in the couple that we've talked about so far that may have seemed confusing, you're like, okay, so you're not selling your puts just because this line is coming down? But if I'm trading my swing points, I would want to trade my swing points based on a swing point trading system. And if anything, simply use the 21 SMA as a crutch, to validate things. Now, you might find that a little bit confusing. And what you'll find is in right here in 4 trade entries, you would have had 2 wins and 2 losses. That's not good enough, is it? So I'm actually going to be taking that focus group video down because it is actually, through further study, found to be a little bit contradictory. I want to show you the difference as we go through swing points without. You notice how much different the chart looks just by taking that one line off? Does anybody notice that? How quite literally I took one line off and it sometimes changes your perspective? Anybody here? Just make a quick note of that. Look at when the line is on the chart. Look at when the line is on the chart. Where it said hold, 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 even though you're making lower highs or higher highs, higher lows, hold. Oh, you know what? Maybe you did want to sell back over there. But having that line on the chart gets a little deceiving, doesn't it? Because it did have you waiting for this to happen. When you take that line off your chart, and this is what we've talked about before with having too much crap on your chart can really confuse your trades. So I went through that little bit, and what I'm really wanting from that is for you to realize that I need to take down, and I will be taking down, that focus group video from the 60-minute chart for Facebook, because the 21 SMA isn't really that good of a crutch. And I want to show you why. Using our same swing points, we're going to start back here. And that was our lowest close. We made a lower high and pulled back from it. This, all day long, is a puts entry. In fact, let me just take a quick show of hands. Who here gets really confused with strangles? Like, why don't we just sell one side instead of buying another side? Why don't we just take some freaking profit? Okay, thank you for being honest, Daniel. Now, can you see why this right here would have been a trade entry on this close of 67.14? We had a swing point, came up, lower high, started to pull back. We bought on the candle that was pulling back. As time goes on, we want to continue marking our swing lows and our swing highs. Anytime one is failed, like the swing lows, it'll disappear. So it falls here, we get a swing low. You can delete that line. It comes up, you get a swing high. Is there any reason to exit this trade yet? And you come down here, you know, a couple candle move and it jumps up. You didn't break above your swing high. Oh, cool. I failed that line. That was good. I was worried about that one. Now I failed this one. I love it when they come back up and retest it. Hey, I failed it. Now I'm telling you I'm gonna be done with it. And as it falls, you develop a new swing low. Now, one thing you're gonna find with your swing points is you don't need to be quick to exit when it only makes a lower, or if we're in puts right now, you don't need to be quick to exit if it just makes a lower high. Remember how I say all the time swing points are a game of higher highs, higher lows, and lower lows, lower highs? Do you know why I say that? Because I do think it's important that you wait for both to happen before you make a move. It came up and bounced. It made this high. Here, it sets you a low point, but it's a higher low, right? Followed by a higher high. Now, all day long, this is where you exit your puts. Remember when we made the trade entry up here? When we made this trade entry, what did I say we had to wait on? It wasn't just, ooh, that's a lower high. It was this candle closing to show that it was pulling back, right? I'm not saying you have to wait for it to make an evening star just because that was an evening star, but it went up and then this candle confirmed it was coming down. So even though this one closes above, might be time to exit puts. This candle did not confirm a move above, did it? So yes, we would have exited puts. That is, you're not going to be able to see the next candle. You did make the close above. And you know what? That was an hour long that you were like, is it going to fall below? Is it going to fall below? Is it going to fall below? Now, as that trade finishes, all you need to worry about is your 2 swing points. It came up, and because it made a higher high, you need to anticipate that it'll make a lower or a higher low. But it doesn't always work out that way. And now, because it made a lower low, you need to do what? I mean, sometimes, but it's what you need to wait to do. Now it's made a lower low from this low. Well, I've got to wait for the higher high, higher low sequence or lower low, lower high sequence to make an entry. What are these lines on my chart? What are the lines? You could call that, you could say swing high, swing low. That doesn't matter. They're support and resistance. Support and resistance, aren't they? Just like with any other trade system, lines I put on my chart are support and resistance. What are 2 assumptions you have to make as a trader? Support will not be broken until it is. And resistance will not be broken until it is. That might sound stupid, but it keeps you from making the assumption that you can sit and look at the moon while you're standing in quicksand. That being said, if I'm short and I bounce off support, assuming that it's not going to be broken until it is, I have to sell my short, right? And if you look right here, we would not have made our second entry until a full day later. Okay, it made the lower low, now it's made the lower high. Now this here is only a $1.45 move. It hit my support and it moved up. What assumption do I have to make? What assumption do I have to make there? Yeah. That, wow, it might not break that line. Matter of fact, it could bounce here. That it could bounce here. But the reality is, I got a dollar move. And albeit in this case, it would have been a small one. It would have been a small what? Yeah, a small win. Now, what is this right here in relation to this? A higher low. And I have to wait for what to happen to make a trade entry. A higher low and a higher high, right? Which means I could have bought on this candle. Now, if you're okay doing strangle trades, rather than sell those puts there, assuming it would bounce, you buy calls, sell your puts, when guess what? It did hold that support. It failed my swing point. But we're going to just talk of single direction trades. Buy calls here. It makes the up move. It gives me a consolidation line, doesn't it? I come down to a down, it struggles here, it struggles there, then it breaks again. I make another swing high. Hey, I bounced right off my support. Now this is the next morning. I get a little gap down, it runs up to what? What's this line? Resistance. And you might say, well, I got to wait for that candle to close, and I'll agree. But one thing you don't need to do is let it to continue falling. Use your 2-line rule. This one just happened to close after this line failed at the second line. But we hit, pulled back. Now on this one's going to be closer to that break even, okay? And for my studies, if it's a break even, I put it in the loss column. But let's look at something. If I use this close right here compared to this close, and then I pulled back and failed my support, what do I got? A puts entry, right? And I come down and I'm dropping and dropping, and in reality right here, what I have is I'm looking for this swing low, right? That's my support. My resistance would be my assumed lower high. And I drop. Wow, I closed right below that support. And then I hit this support. Man, I closed below it. Probably need to leave this line here. I closed below it. Now the fact that I closed below it tells me what? If I close a candle below it, I have what? An invalid support. I don't need that freaking line. Bye-bye line. So I'm kind of in a free fall. Then I start to go sideways. And I get a bit of consolidation, an opportunity to draw more lines. And I get the lower low. Now this isn't a higher high. Well, actually it is on the close. It's a higher high. What do I do with my current puts trade? Bye-bye. Well, this support was broken when it fell below it. That was a swing high. That was a resistance point. The only problem is it didn't do a good job of the retest here, which has you waiting until that breaks. And you held it. Next candle moved up. What do we do here? What do we got to do right here? Yep, take a calls entry. So we go up, we come down. We just made new swing points, didn't we? A swing high and a swing low. Then we gap up. Wow, this is sweet. And all that next day, we're going up. And then the next day, we gap up. What did we gap up to? Resistance. And what assumption do we make? What assumption do we make? That until it's broken, it won't be. Look, it got up there and it said, I'm scared. Would that have been a winning trade? I think so. Now the problem is, right here, you don't really have what? What don't you have here? To find a new trade entry. Well, you have support. Support's all the way down here. You don't have that sequence of a lower high, lower low to really validate that next puts entry. But you can rely on your assumptions. And what do your assumptions say again? And these are assumptions you make with any trade system. That's why all these trade systems do is say where support is, where resistance is, no matter what the trade system is. You don't assume reversal, you trade reversal. You assume that resistance will not be broken until it does. So that resistance becomes a stop for what? The resistance becomes a stop for what? A puts entry. Right here. And where would our target be? Keep it simple. Where would the target be? The next line, right? We can say support, but you just say the next line below where we're at right now. If we're up here, we close this candle down, we exit our calls, and hey, hold on a second. This thing's going to fall. It could fall all the way down here because I don't have any more lines still there. Right? So you fall almost to here, and then the next day you gap down. Well, I did break below that support. Man, I remember this day actually. It came back up pretty quick. If I have a line here, what does this line annotate compared to these lines. Actually, there'd be one right here, the highest close. What is this line here? What am I showing? A lower high, right? And I broke below this swing low. Even though I didn't get a close below there. So what I have is I have a lower high and a lower low. Because this was my other low, right? Low. Now here's a lower high and a lower low. Here, I made a higher high, didn't I? But unlike that last higher high here that followed a higher low, do I got to exit right away on my higher high? It made no continuation, and it didn't follow a higher low like this one did. I might have to move my line up, but if I don't get continuation on that next candle, then I can wait for a lower high or a higher low. If I get a higher low, I don't even need to wait on another high. I can sell. What did I get here? A lower low. And what did I get here? On the highest close there? A lower high. And then that broke through. That line's gone. This line's gone. Hey, that's pretty sweet. Now this is the first time it's actually bounced off a line, huh? So what do I do with my puts? It actually bounced off my support line. Not some funky made up area of where I could buy and sell and make up the trade. But it actually bounced off a line. Yeah, that's a nice winner, isn't it? Because all those other supports failed. So I didn't have to assume they wouldn't be broken until they are, because it never even looked like it was going to bounce off them. They were failed. This one didn't fail, and it bounced. Bye-bye. What assumption can I make right here? Yeah, hey, that's my support. It held. Well, if I'm going to assume support held, then that also means I've got to assume we're probably going to go up off. Now the cool thing is, my buy off support right here gives me a new line, doesn't it? Which would be what? What would we call this new line compared to the line that was right here? It is a higher high. And when this candle closes here, in comparison to now this low close, what do I have? A higher low. And when I come up here and break this line to say that goes bye-bye, and I put one here, what do I have? Higher high. Then I come back here. What happens right here? As it bounces, oh, that's a higher low. And then I get rid of this line. Ooh, and then I get rid of this line. And I have another higher high. Yeah, it's right at support. It's actually at the exact value to the penny. So I don't need to sell those calls there, do I? Here I hit my resistance. Did I make I mean, here I hit resistance and I could definitely tell I pulled back. I didn't talk about selling it clear up here. I said wait till the candle closes. Did it look like we pulled back from it? It's not rocket science. Here I put a wick up there. As that next candle opened, did it look like I pulled back? Wow, and cool. We're going. We're going. Uh-oh. This line goes bye-bye. And then we make one here and we kind of get a doji and then we do this. What do we got right here? We broke resistance, didn't we? Well, we gapped over the resistance. Look at it. And did it fail the resistance? Now we do have some resistance points that are here all close together. But look at it. We gapped over one line and we held it, didn't we? We closed over another line. Now look, 1, 2, 3, 4, 5 candles all held that line. They all held this line right here. After, this one, it comes above it. What do we got to do right there? What do we got to do? Yep. Now, are you okay selling that one? Is it okay to sell that one? Because what kind of sell is that? What kind of trade is that? It's a winner. Now, just real quick, with our swing points, what are we marking as our swing points? Is it absolute highs and lows? Is it the opening price of the candles? Or is it the closing price of the candles? No, every one of these lines I'm putting right on a close. So that's why sometimes this can, oh wow, why aren't you putting your line way up here? Because it didn't close above it. This is a 1 hour chart. That means each candle is 1 hour. Now, what assumption do we make here when we failed to break our resistance and pulled back? So we would have a little swing low right here, and we close below that. Yeah, we'd have a puts entry here. Now here, you see this move here that gives us, we're still looking at this low. This was just a prior little consolidation high, and actually, I should have just put it at the gap. But let's look at something for a moment. I had the line in the wrong spot. What did this do? What did it do? Well, no, I put the other line on there prematurely. Your gap fill is your support, right? It hit it. Hey, Chuan. And did what? What do we do with a swing point trade? We're in puts. It just bounced off support. What assumption do we make about support? That if it don't fail, it ain't going to. It might not have been a big winner, but it's still a what? Still a winner. And because we held support, assuming that support wasn't going to break, what are we buying? Calls. Right there. We're buying calls, right? Remember, we're just talking about a single direction trading system. No complicated strangles or this, that, and the other. Still hold our calls, right? Still hold our calls. Still hold our calls. Look at this real quick. What did it do? It gapped up. How many lines got failed? Uno. Dos. You're right. 4 of them got failed. You are right there. But wouldn't we have sold our calls when the second one failed? 1 line, wait for the close. 2 lines, sell that crap. Well, let's see. If we bought this at 61.60 and we were going to be selling at 63, what kind of trade is that? Is anybody but me keeping track of the wins and losses? Right now we're at 8 wins, 1 loss. If it failed 2 of these lines, what type of trade should I be making? Puts. This line didn't serve as support. It blew right through it. Man, we come all the way down there, and then we came back up above. Oh, I'm missing a line. That high point. Consistent with everything else I've marked, right? We buy the puts. We don't care if it goes below 2 lines, right? But how many lines did it come back up above? One. There's a line there. You might not be able to see it. 2. I mean, it closed just barely above that, but it still crossed above 2. And this trade would have lasted less than an hour and would have came back $2 from where this was, but it still would have been up. It still would have dropped over $1 from where you bought it. So what type of trade would that be? Yeah. No, how would that have been a loss? We bought puts at 63, sold puts at 61.80. Now, it might have felt like a loss after you saw 60 bucks. And then it ran up $2. But isn't this game not always about how much you could have made, but what you actually make and finding a system you can trade robotically? We wouldn't take calls yet. See, we took calls here because it hit support and then made the positive move off, right? That's what we were waiting for before we took calls down here. Well, we have support and we're making the positive move up, right? We held support. We're still holding support. And we did what? We're at 9 wins, 2 losses. Because yes, that's a loss. And actually, according to this system, it's a loss that made you really mad because you sold here and man, it closed back up here. But you sold here before it ever went down further, right? Because it failed 2 lines. So yeah, it came back above where you sold it, but when you sold it, it also went lower. Do I need another line right here off this high point? Absolutely. That's not a good support point, is it? But I'm still holding that support I held before, right? And this line, even though we put some wicks down there, it's holding. What do I do? What time? Do you see the difference in buying puts when you should and wishing you would have bought puts when you should? You could have also said, hey, that hit my resistance line and pulled back from it. You could have already been in puts right here, but you'd have definitely been in puts right there, wouldn't you? You'd have definitely been in puts right there. Because no matter how you view it, this one was definitely where you bought puts. By the way, my support here failed because we closed below it. Just like we had a line on the gap fill, we have to put a line on the gap fill, don't we? We closed below that line, so it's no good. Hey, we had one line fail, meaning we fell below it, but it failed when we came back up above it. So that's a line fail. Well, that support didn't hold, did it? I'm sorry, just like I had a line there before. You're gonna want to line right on that too. That almost looks like it bounced off support, doesn't it? I'm glad we wait on the actual positive move from support. It's looking like I might not have a support here right now, huh? Now let's look at that. And let's consider where you entered the trade. Walking through it with me, you entered right here. You got all through that, you let your candles close. You don't know if this is support, but this happens. Now take into account what I say all the time. By the way, you just dropped $6 in share price. What do you think just happened to your puts? Do you think they're up 100%? If they're up 100%, you at least do what? What do you turn them into? Free contracts, right? What do I mean by free contracts? If I bought 10 of them and they're up 100% and I sell 5, I've now completely eliminated my risk moving further in the trade. That whole, well, what if it keeps going down and I'm in puts? Well, you know what? I have no risk if it goes up. Sell 5 of them. Now you have all of your capital back. And let's think of something for a second. If I did that right there and sold my sold the free contracts here, it's definitely not going in the loss column, is it? The trade will definitely not be going in the loss column. It's moving up. But what are you on here? I don't mean like Sam being on crack. You're on free contracts, right? You're not buying calls. Why? Why are you not buying calls? Remember, before we bought calls here when it bounced off of our support, we failed our support. Before we buy calls, we need a higher low and higher high sequence, don't we? Well, Jerry, your resistance is 60 bucks. Well, actually, if you stay consistent with what I've been doing, that consolidation is going to mark a resistance. That's 58 bucks. But you know what? Sometimes you have to be willing to give some up for the opportunity to make more. That's part of trading. And that's why if you're just trading a single direction like that and not doing the strangles and making it all complicated, you sold the free contracts. What's this look like? Does that not look like now a lower high? It'd be hard to tell me that that didn't look like a lower high. And I bet you that whole hour you were squeezing going, oh my freaking God, I can't. Because remember, at one point in time, this was a big green candle, wasn't it? Up to that high of 57.64. But it didn't break your line and you're on free contracts. But that right there is a good example of the harder they fall, the bigger they bounce. And as of right now, you've got to look at that as that closed, this candle, that there is actually a lower high following a lower low. What do I have to buy there? Even though I'm in free contracts of another trade, what do I have to buy there? Puts. It's a lower high. Well, poop. But you know what? That happens, doesn't it? Doesn't that happen? And you know what? On that other buy, we just took loss number 3, but we just sold the rest and completed win number 10, didn't we? You know, unlike other places that might do a walkthrough like this and make it sound like you'll never lose a trade, I think I'm being pretty realistic on how you could trade this in real time, right? What do I have to wait for now, though, until I buy calls? Well, I've got a higher low here. I got a higher high here. So I can buy on a resistance break or any lower high at this point, right? Or should I have bought at the resistance break that made the higher high? Now, granted, here's where it would have sucked. Where would you have actually been buying this at? Where would you have actually been buying it? According to this trade system. You see, if I would have said, oh, buy it when it's all the way up here, then guess what? You'd have bought it on this candle and it'd have fallen all the way back down. You'd actually have to buy that on the close, wouldn't you? You would actually have to buy that on the close. Because that's what the trade system says. Because we didn't have a 2-line failure. There wasn't another line randomly placed somewhere. If it would have broke this and kept going during that candle, yes, you could have bought it. But the other thing you're going to want to look at is, do you have a dollar move to your next line? You're at 57.50 and your next line is at 57.88. Options are a game of dollar moves, aren't they? Why do I say options are a game of dollar moves? Your delta is based on a dollar move. Your gamma is based on a $1 move. Well, you know what? Somebody better than me came up with that crap. So they apparently say options are a game of $1 moves. So we're not buying there because it is too close to our resistance point. And why would we have a line there? Because every other time it did that, we put a line there, right? What can we do now? We can take calls there. Here's the bad part about it. Our last low is all the way down here. But you know what? That's trading. That line's gone. We do need to put one at our gap fill, right? This line's gone. No. Single direction trades here. But did you see how the system said I was okay to buy on this, even though it looked like we might have been chasing it because it was up $2 from the last higher low? But it's not about that. It's about following what the system says, right? And if we're going to test a chart on a system, we can't change the rules for every different chart situation. It either obeys the rules of the system or you don't trade it. So we bought here because buying here didn't give us a dollar move to the resistance break. And you know what? 2 candles later, it looked like it might pull back from that resistance, but it closed above it. It stayed above it. It stayed above it. It had you really scared when it gapped down, but it closed above it. It closed above it. It closed above it. It ran. It ran. It ran. Oh, so you weren't chasing it, were you? You were trading your system. As we start to pull back, even though we haven't hit a resistance point to stop out of the calls, we do need to put a swing point up, right? Because it's the point where we stopped and started pulling back from. And just like before, we're going to mark that open from the gap. Remember, right here we mark the open from the gap. Here we mark the open from the gap. We do need to mark the open. By the way, if you weren't already in a calls play, you just bounced off your support. You're still holding it. Still holding it. You might be getting nervous. But on our trade we entered here, did we just make some money? And you can tell me all day, well, if I would have sold up here, you know what? If you're going to play that game, you'd have been buying here, freaking out, peeing your pants, probably not selling, and then getting lucky when it went back up, and then bragging about that trade later as if you actually did something good. All the while sending me private messages going, what do I do? What do I do? But the trade system said it just closed below a line. But I don't have a dollar move to the way. I don't have a dollar move to the next line. Sucks, but you know what? It doesn't suck so bad because I just took win number 11 and I'm on 3 losses and we're only through about 3.5, 4 weeks of this chart. Here, this line goes away. It didn't hold a support. As it starts to look like we could bounce up, this is where we adjust these points. Now let's watch something here real quick. We gap down. We haven't bought puts. Remember, we didn't have the dollar move from that old line to this line. We didn't buy puts. It gapped down. Something in particular that we've been talking about that has to do with 2 of something. Gap down and went ding, ding. It's a 2-line failure for a puts play. So even had you taken puts, you would have stopped out of them, but you would have bought calls. Now let's think of something right here. Remember, there was a low in a swing point system marked by the gap. What was this low? A lower low, right? You could say, well, that wasn't very much of one. But we're using closing prices, and that was a lower low. And if that was a lower low and we just came here and pulled back, what is this? What is it? Hello, is this thing on? That's a lower high. And you know what? In that case, in that case right there, you got two choices. Break even right now on the calls you just bought, or allow it to fail your support and risk losing. Me, I'm always willing to give some for the chance to make some. But if it fails my support, we're good. I don't need to do anything. Now, if you're only trading the single direction, you exit your calls, you also have a puts entry right here. But remember, if we were looking at the puts, we did actually make a lower low and now a lower high, which gave us the validation for a sequence on puts. Excuse me, that's over. And what did I just do? And this is why I would always wait till support fails rather than a lower high on my calls, unless it hits a resistance and pulls back. Because I don't have to assume some random spot in the middle of nowhere won't be broken. I have to assume resistance or support won't be broken. And this was random spot in the middle of nowhere. Now, what did I actually do there? Yeah, well, if you either look at it as a two-line break or you look at it as you still close below that, I just took a loss on those calls. And you could say, well, no, you pretty much broke even. But the last time I traded options, anytime I broke even, it meant I paid my broker. My broker made money. I lost money. This goes away. What just happened? Somehow it rewound some. Where am I? Right here, right? We broke a support. And in this case, because, we did close back about, well, this one here, we broke below it. Now that we have failed support, unlike before where we didn't fail support with this, so yes, I waited 3 extra hours or 4 extra hours, actually till the next day, to take the loss on the calls instead of taking them over here. But what did I do different here that I didn't do there? A support point, right? And I made a lower high. But do I have a dollar move to my next line? No. And it went to the next line. But I had to assume that it could stop at that line, right? I had to assume that, well, it hit that could be all the farther it goes. That could be it for that trade. Could it be bouncing? Move up from the line? Would I buy calls here? Why not, Jerry? That's the correct answer. Why would I not buy calls? No, I couldn't buy calls, dog, because it would invalidate everything I said the whole time we've been talking. Well, that would be one reason, Jerry. You don't have the dollar move. But even more important, it made this low a lower high and a lower low. And this isn't a low. Remember, the bounces we made off supports were on swing lows. On swing lows were the supports that I was assuming would not be broken because they held as the lows before. Is that a low? It's a gap fill point. It's a point something could bounce from, but see, it already did that game. And now I've made this high, this low, a lower high, and now a lower low. Aren't I not looking for validation to allow me to buy puts? Did I just get my puts validation? This line goes bye-bye. I close below it. Why don't I have a line here? That's an open. The open is the bottom of the candle body. The close is the high. On a red candle, the open's the top. The bottom is the close. We're using closes. We did have a consolidation point here. What am I thinking about this trade so far? Oh! Do I have reason to sell this puts play yet? Any reason to sell this puts play? No. Matter of fact, all this little bump up did was gave me a place to put a line, didn't it? Just like I put lines on those things. I put it here when I had it here. I had lines on the top and bottom of this area. I had a line up here. That little bump up just gave me a place to put a line. What do I do here? I gotta mark my swing low, but what do I do here? At this point in time, don't I have to assume that this could actually go all the way back up here? From 57 to 60? But the problem is, it's not a call straight. Because we could still fall to these support levels. And it's made lower lows and lower highs. Now, could you make money on calls just randomly guessing? Yes, but the system doesn't support it. When this, it's kind of hard to show because when this candle opened, it was a gap down and it went red, right? And you would have had to put a line here. You got to bear with me because it's showing an already closed candle. But during that point, you just said, well, that's pulling back, so there's a swing point. And it had already broken this one, so that one's invalid. So we've got a low and a high. But we have a higher high, don't we? Didn't we have a higher high from, remember we went this line? This candle right here actually gave us a higher high. So what do you have? It gapped down, it fell below this line, and then it rushed above this line. What do we have? The two-line cross. So we would have been buying this around 57.40 or so, right? 57.50. Here, we got to put a line. But this is still our support, right? And in this particular case, what just happened? It wasn't a big loss, but it was a what? Well, actually here, even though the overall thing is, wow, that's a lower high. The way the sequence set up, we wouldn't immediately be buying puts. Because if we immediately bought puts on that case, it would actually invalidate the whole system we've been discussing so far. You see, this line goes bye-bye because we did fail it. And it sucks. What just happened? What just happened right there? Yeah, you made a positive move from support. So we got at least $1 move from the closing price here of 57.12 to our swing point of 58.55. Yeah. So what do we do there? And don't even say, well, it looks like it could be a W, because right now we're not testing chart patterns. We're testing swing points. Are we? And you could say, well, man, we should have bought puts right there. That's easy to see after the fact, isn't it? And that's why I'm going through it candle by candle, because it's easy to see after the fact. The good thing with this so far, the losses have been pretty small, and some of them wins are huge, huh? Now this really starts to tick you off here, huh? You mean to tell me we barely failed that line and I had to stop out of it? You know, I'm going to mark that for the study as a loss, but in reality, it's the next candle that I look for. But let's look at something for what it is with this trade system. It gave me a new low, and I would have had an established high right here, right? Now you might say, well, crap, now it gapped up and I'm screwed. And this would be the difference between you and me trading this system. Because rather than saying, because no, by the way, dog, for the test, I'm saying we stopped out of those calls and we didn't have a reason to buy yet because it made a lower low. And even though it made this higher high, it had still made a lower low. But I would say the difference in some people and myself, where they would say, gosh darn it, I stopped out of that trade, I lost, screw Facebook, whatever. I'd say it crossed over two lines and I've got to buy that. This one's gone. This was a high point. That's gone. Sorry, that one stays. That was my last high. Now I'm happy. Ooh, now I'm really happy. I mark the low of my consolidation here. See now, like I said, that difference is, yeah, if you're going to trade the system, you stopped out there. And then yes, the next day it gapped up and you were pissed. But you know what? It's better to be pissed off than pissed on, unless you're into that stuff. I mark another line here. Boring, 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 boring. I'm not very good at removing my lines. That's the low point. Stop out. You know what? We got to backtrack. Coach Mike got a little tired and wasn't thinking. Hold on. I would have gotten in when it crossed this. So about 58, 55. Also, too, by the way, we've got to mark that gap, this gap. This is where I fell short at. I was trying to go a little too fast. Did we break above the consolidation? On the close? That's what I was missing, was marking the consolidation. Because that difference, in all honesty, was actually the difference now. And let me show you why it's important. And you've got to keep track of this, but this is congruent with the trade system. That was the difference in stopping out here. It didn't fail the two lines. It failed the one, so you'd have stopped out here, which would have still been a gain, just not a very big one. But it's, or stopped out for a loss down here. You see what I mean? We got to make sure we always have our lines in. Now this support didn't hold. That's gone. This support didn't hold. It's gone. What have we made here? We have made a higher high so far, right? From this high to this high, higher high, right? So any bounce at a point higher than this has got to be assumed as a higher low, right? You know, this one didn't hold. Don't be afraid to delete lines. Here, on this move, we have to do what? We've made a higher high. What do we have to do? We have to buy calls. And we have to stop out of calls. The good thing is, on that stop out, you don't have a dollar move, do you? To play puts. I'll show you why it's a good thing. Because you know what? Sometimes, and like Dog said, that's trading. That's trading. It happens. But as we start to establish points, and remember, a bounce off here is not necessarily a buy, because now right here, we're still finding that low, but we've made a lower low. It looks a bit like consolidation, but if we put the lines every time, now we're here. And because it's a lower low, we've got to break this high before we can buy, right? And it's okay, we can buy right now. This line goes bye-bye. So is it so bad that, yeah, it kind of stopped us out here for a little loss? Here, and it would be before that candle, by the way. Here, you're going to have this line. I don't know why I deleted that one. It doesn't need to be deleted yet. And here, sadly, you actually, now you could say, hey, that looks like it hit my resistance and pulled back. That's what I would say. And if you did that, as you could see, by the way, you could have played puts. The point I'm making is even if you didn't say that hit my resistance and pulled back, so far you didn't stop out. Now, if you did say that hit my resistance and pulled back, and then I'm playing puts down to this line, you couldn't have said that, could you? You had less than $1 move, right? And then as it started to bounce here on the close of this candle at 58.57 to your swing point at 59.38, did you have $1 move? No. So you aren't playing this one either, are you? Luckily, if it does break there, you have right at $1 to here. So what can we do there? There's a calls buy. That didn't hold. Neither did that, did it? Now in this case, when it jumped up and did this, and it's trading between the two lines, I'm not deleting anything yet. Because if it closes back below that line, I'm taking a win. Dog, you wouldn't be obeying the trade system. Because what did it just do? What did it just do? You stabbed yourself, huh? We broke a line. Now remember, on the gap up, we'd have a line here. We don't need a line here. The gap filled. But if you wanted to still have it there, you could have it there. It doesn't matter. Either way, you did just close below your line. Got to move our swing point to here. But what kind of trade was that one? From this breakout to right here. This is a winning one. It was our 16th winning one with 6 losses. Now this support didn't hold, so that gets removed. We've got to look between this line of $60 and what's the close on it? $60.52 and this high here at 61.36. We don't have $1 move. So even if it looks like it's going to bounce, we can't be suckers, can we? You might be the only person here. Now here's what sucks. And yes, it sucks. We didn't have a dollar move to buy here. But we also didn't need to wait on the close of this candle, did we? Because where could we buy based on it broke one line, it broke two lines? We didn't have the dollar move here. To buy here would have been like, oh, wow, I got lucky, and yes, it worked out. But we broke two lines. We just closed above that one. We got to mark our consolidation. We closed above that one. We closed above that one. Mark your swing point. You're still in this trade right now, by the way. Actually, Richard, I've been watching them as we did it. It was only the very first trade that you needed to be out 3 weeks. Every other one's been 2 to 3 days. So you would have had to sell the very first one a little bit early. You really would have only had to sell it 2 days early. And the last 2 days of it, ironically, if you went back to it, were the days it was going sideways. So all you did was waited the extra time to be able to sell it. But if you played 2 weeks out, you'd have had to sell it and you'd have made money anyway. But if you look here, we're still in this trade, aren't we? It popped up here, didn't close below my line, made a move. We got lines everywhere. I gotta move this line up. Take the prior swing high line out. Keep my low line. That one was scary. Ah, crap. What kind of trade is this one? In this one, you could have validated selling either here or here, because after setting the resistance, you hit it and pulled back from it. So you didn't have to wait for another 50-cent drop, but it's still a winning trade. Now we're going to talk about that as I get through it, because I'm keeping track of how far it moves on average. I'm keeping track of that so we can determine what strike to play. Now that support didn't hold, so it goes bye-bye. Are we playing puts here, or has it made higher highs and higher lows? We're not playing puts because we don't have the proper sequence yet to play puts. Matter of fact, we might have to take the shot on calls right there, right? Coming off a nice win on calls. We might have to do that. Crap. So we made a new low from our low that we had marked. And we pulled back here. We're going to sell our calls for a loss. But we also just had reason to buy puts. That was just a support point. It's a resistance point we're watching. I'm sorry, this line wasn't supposed to be here. Even though it bounced right off of it, it actually wasn't supposed to be there. Now let's look here. Let's look at where our lines are. We're consolidating. Consolidating. In here, sadly, took another loss. By the way, that was calls because I didn't annotate that, but we made the higher high after all the higher lows. So calls buy. And here, what did we do? I didn't stop it quick enough, but pulled back from resistance, right? We've got to take the set. We've got to sell it. Now we've double topped. Well, here you wouldn't have done it because you didn't have enough room. You didn't have the dollar move down to support. And really, through all this time, you don't have the dollar move. You literally got to break down below here or come all the way back here and pull back, because once we crossed down here, we did get rid of this line. But we got to have a dollar move between the lines. I think there's reason to believe you got a puts play. Now, sadly, that puts your last high all the way up here. And you do have a consolidation point there. That support didn't hold, so we got to make sure our lines are good once we're in that. This was that, I know exactly where we're at on this chart. This was that freaking 2-week period that I hated Facebook. Here, you got blasted on your puts. And this was a lower high. You're not going to go jumping back into the calls. But I need to back it up because I was talking as I was hitting the button. Here, because I have a lower low that followed a lower high, what do I have? Lower high with a puts entry. Sad thing is, I know this whole period of 2 weeks is going to really mess up these numbers. It was the most awkward 2 weeks on Facebook, but we got to trade the system, right? Hold on a second. I gotta make sure something real quick. That was 63.14, and this line 63.13. No, you wouldn't have entered puts there. You didn't have a dollar move to make yet. So that wouldn't have been a puts entry because there wasn't a dollar move. We've stayed consistent with that the whole time. But what would we have done here? Would we have just gone, man, them last 2 weeks pissed me off? Or we just said 1, 2 lines. No, we wouldn't have entered that put trade. That's what I was saying. There was not a dollar move between the resistance point and the support point. So even though it was a lower or high, it did not have a dollar move to be made. Options is a game of dollar moves. But here, you gapped up a 2-line gap. What's a 2-line move? That's a buy, isn't it? We got to mark the gap here. We got to mark the open. Now here, we got to mark a swing high point, right? Next day it gaps down. Hint, hint, you're still in the trade. Hey, we get to put another line on the chart. I like lines. Oops. See, here would not be a pullback from resistance because on that close, it actually broke that. So that was actually, it broke resistance. Now it pulled back. And now you close below your support. Actually, you had the 2-line failure before that. The down move, the up move, 2 lines. Well, Richard, I can tell you this, it would definitely. And that's why we talked about it earlier. Some of these that have even pulled back on you, you're going to be out on and I'm going to say this again, any single direction trade you're making, you can't necessarily do it with strangles and stuff, but a single directional trade, you hit 100%, you go free shares. That's a given on anything I ever. Didn't hold. That support didn't hold. Yeah, still not looking like we're actually bouncing yet. Kind of looking like we're holding that line, huh? We got a dollar move. Time to play calls here. Now we're going to mark our lows. This is a pain in the butt. But it's all them closes are holding. We do want to put a line here on that move up. You want a new low line here now that you've made that move. Now we got a good ways to go. There you pulled back from resistance. And remember, it's the lows that are your support. So it wouldn't be till here for puts, but you don't have a dollar move. There's only a 50-cent move to make to the next line. I gotta clean this up because this is a mess. All right, had too many lines there for a second. On the line failure, even from here, from this line, we had other lines in our way and didn't have a dollar. Now, the one thing I don't necessarily like about trading systems like these, or like this one, is sadly, you're not always in a trade. But that can be a good thing too if it gives you a high success rate. I remove that support point. This one goes bye-bye too. And we have a consolidation level here. This one didn't hold. It closed below, but we weren't able to trade for it. It didn't have a dollar move, and then sadly, now it doesn't have a dollar move. But who knows? That might protect us a little bit. It's easier to look at it after the fact and say, well, it moved a dollar. And that's why we have to have a system to protect us. Now, it had made a lower high and a lower low. So we're not looking for calls here. The time that bit me, not looking for calls there. We got one line break. Sorry about that. You'd have a line right there too. And the second line break here. So even though this shot up like that, your other line break didn't come until here. This was your second line break. So you'd still gotten a dollar move just on the one candle from buying. We want to make sure these points are marked because they'll come in handy. They typically do. Because when I have the lines there, and I know that. The low point is where it's going to get you. Or bounce. Now you have an established resistance here. If it pulls back from it, you sell. If it doesn't, you don't worry about it. It didn't. We do need to mark a new low close. Hey, look at that now. Bounce right off the, I liking this. Now here, I would be marking another line there. From that resistance, and it broke it. Want to mark a new low here. Remember, we're watching our low. I just haven't deleted that line yet. That's definitely gone. You had a new line there, and because it broke that line, you put your new low line. And we're going. You just put a new line here. Watching our low. Failed two different lines here and here, so we didn't have to wait for the big failure. But that's a winning trade. Just not as big of a winner as it could have been. But you never know in advance. That's the one thing about these stocks. Now, because you have the two-line failure here and here, you're looking and saying, I don't have a dollar move. I don't have a dollar move. But I ain't waiting for that candle to close to buy the puts right here. These lows didn't hold. Get them off your chart so they don't confuse you. Now here's something to look at as you started to consolidation. I forgot to mark another low here, but I'd be deleting it right now because it didn't hold. This one didn't hold. Oh, that was a high point. So we're at this swing low point. A positive move here would be a sell. Yeah, I'm not so sure that's positive. That's probably positive. By this point in time, I'm out of the puts. Probably at least on free contracts of the puts. That's for darn sure. But either way, it'd be another winning trade. Let's see. Yeah, we have a dollar move there. You got to take the calls. Right at it. I hope it don't disappoint. Ouch. Well, but you see that there, I'm telling you, there's no trade system that's ever going to give you 100%. You'll never lose a trade. If there was, that's the only thing we'd ever talk about. But on my move here and here, I've already got a 2-line failure. You know what? That's where my mistake was right there. You notice as this bounced, yes, you would have bought calls. You would have stopped out of calls right here. And because of the 2-line failures, the lower highs after the lower lows, you are in a puts position, and you would be in puts for that. And you'd be quite happy about it. I don't know why my line was missing from there. That's a low point. Well, shoot, let's just get rid of all these lows then, huh? Because none of them are holding. Hey, you're actually right, Richard. I'm getting a little tired, but that calls trade you wouldn't have made. You are absolutely right about that. You would have been looking for a puts entry. Thank you for keeping me on my toes. Thank you for keeping me on my toes. Sometimes when you are already going on 14 hours straight, it's a little difficult, but you actually made a good catch there, Richard. Because for studying the chart, we got to stay accurate with the trading system, right? Now, right there, I'm selling those puts. I don't care what anybody says. We'd be up so much right there, we got to sell them. Well, actually, at this point, we're still looking for our next puts trade, right? We've made these lower lows and lower highs. We're waiting for a puts trade. It crossed one line. So that might be a higher high now, right? And if that's a higher high, we're not trading that yet because we don't have a higher low yet. That sucks. No, actually it sucks. We're not in this trade. We're not actually in this trade. Whew. Probably a good thing we're not in that trade, right? pretty nice that the system helped out, right? But we did just have a higher high. And we did just have a higher low, didn't we? That point. And we definitely got a dollar move, right? There's a dollar move to be made there, isn't there? Richard B would also tell you it gap down. It fills that gap 90% of the time, coach. Oh, well, broke right through that. Sad thing is oh, okay, so now we got to mark this one. We had that one. I forgot to mark it, but had that one. This one goes bye-bye. We closed above it. Whew, thank gosh we didn't pull back from resistance, right? Okay, gonna mark this one now. Better mark my low. I gotta know where my stop is, right? That is kind of funny though, how the swing point system is that we wouldn't have bought that, but thank goodness, because we would never have had a reason to sell it, would we? Do you guys realize, I mean, you look back at this trade, that whole day, a big up move, that at least for this chart, now we're talking about trading out a couple weeks on a 60-minute chart. That's not the only way to trade Facebook. We trade Facebook on a 5-minute chart, we trade it on a 15-minute chart, and we'll have trades going on each of those charts. You might see me in 4, 5, 6 Facebook trades at one point in time, and them all be completely different trades. I might be in some puts and some calls. I might be in 2 or 3 puts plays and 2 or 3 calls plays. It has happened before. And actually, that last time when I was in 3 puts and 3 calls, I only lost money on 1 of the 5 trades. Do that kind of math. That can get confusing. But our 60-minute chart, we would not have been in that one, thank goodness, because it would have been a complete waste of a day. Even though we wouldn't have stopped out and then it came back, but you know, we would have had a better buy. It was almost like you got to redo the next day. Huh. Oh, forgot, we got to mark our gap up low. Now, what did we have right here? Because we did have to mark our consolidation low. 1 line, 2 line. Now, granted, full dollar, but it would have taken us to the second line. But it's still going to be win 24. Now, I can also tell you, you'd have been on free shares on this one, clear back here. Literally that one day you'd have been on free contracts already. So that support didn't hold. It's got to go bye-bye. And that's just a prior swing high point. So far that low held. No, we're actually not in puts. We've been making higher highs and higher lows. We're not in puts. And we just bounced off a support point. We're in calls. And that low didn't hold, so it gets removed. Not only are we in calls, but we got a new support point that's higher now. Oh yeah, you're gonna catch me in one? Nope, thank you, Facebook. There you go, get up there, you bastard. That gap down the next day would have scared you, but it wouldn't have done nothing to you. It would have there though. What it would have done there is a 2-line failure right there. But now what have we done? You see, at first this low was just, well, you do have the gap down point. But from our last swing high to this swing high, on that 2-line failure, you'd have to stop here, but you've also got a puts play. Hold on a second. I gotta actually see if you would have had a puts play or not. I don't want to assume you would have and then be wrong because Richard B will catch me. 67.35. No, you would not have been in a puts play yet. You didn't have $1 between the lines. That rule has saved us. Right now, it's looking like it's hosing us, though. See, now I don't have my $1 between the lines. This kind of sucks. There's 1 line. There's 2 lines. I get to move that line up. That line goes away. By the way, when I was counting the lines, that's a calls entry, would have been here, even before the close. When we crossed this line right here, that was the second line. You know, these would have been, excuse me. So it seemed like we were chasing it, but we really weren't. That's not too shabby now. Now the gap up happened for earnings. What do we do every time here? We mark that low on the gap up, right? And you'd have stopped out of the trade, right? And now we're making lower lows and lower highs. So you would have actually not had puts here. I'm sorry. This lower high after the lower low from where that line was failed, puts entry. You got a low. You still made a lower high. Be in puts right here, but maybe stopping out if you were to cross back above 74.13, which with Twitter's earnings, you could do that. But you'd be up in that right now. So tallying those up for an entire 90 days on the 60-minute chart, 28 wins, 8 losses. 3 of the losses were actually good size. And you don't want to play more than $4 out of the money 2 weeks out. You got that? No more than $4 out of the money 2 weeks out. 28 wins and 8 losses isn't bad at all. Especially when some of those wins would have been huge. I might need to start trusting the swing points on the 60-minute chart more myself. Now, I want to tell you why I went to those and not other things really quickly. And I'm not going to go all the way through them, but you'll be able to see them fairly easily as I do them. The Fibonacci extensions, okay, they look great as you're setting up here. And for a while, they actually will look great. Did you notice all the inconsistency? I mean, it didn't even recognize that 100% line right here. Didn't even recognize it. It didn't even recognize it here. Well, it kind of did. It went above, then bounced off of it, went here. But see, then you run into these problems where it's not even close to where it should be. That's an untradeable system for the Facebook 60-minute chart. Fibonacci extensions, my favorite tool to use, is an untradeable system on Facebook's 60-minute chart. If I were using channels, on Facebook, I'm just going to go through real quick on trades you would have seen. As you fell here and made this pullback, you'd have bought the puts play. When you closed outside of your channel and popped back up in, you'd have exited here. That's a winning trade. Oops, let me put that channel back up there. It's important to have that up there. Once you started making the higher lows, you'd be making an entry. If not here, once you ruled out the argument of the old channel. And even from this point to where the stop out point would be there on channels is win number 2. When it stopped you out of here, the easiest thing to have done was found another high point, run through your high point, run to a low point. And when you got out here and bought the puts here, you make a run. And if you didn't say that was close enough to my line, guess what? It crossed your 50%. And even if you got out here, you got out with a win. At this point, and I don't think you would have had it at this point. You may have, but this would have been more of the scalp trade, so I don't think you would have seen it as that. Because you would have been more likely to wait for the top to be hit. But on this, you can't buy this. It's already at your top line. So that would not be a buy, and that was the point I was making with that. Now, even though you gapped and ran above that channel, as you pulled back within it, you're going to be looking at a channel like this. And what do? You hit in there, you bounced off your 50% line. You know, I got to say you sell that. As you watch these moves, and you make another move on it, and you bounce off your 50% line, even if you waited till here, you got to sell that. But at that point, you also have something else working for you. You got this. And as you get going, you get out of that channel. You should be seeing something else right here. I want to stay progressive, don't we? I'm always progressive with my channels, by the way. So there, just stopped out of them with a win. You don't really have anything to go off right here. This is acting up too much to even be traded. So you have to have, well, that's a higher high. You wouldn't be in anything yet. I'm just kind of running how I would project channels. You wouldn't have entered off of that. That'd, well, if you did, that was really, really courageous. I'm just seeing if something holds. No, see, we should have gone puts off that top, but we didn't do it. It didn't give you that clear opportunity. So that wouldn't have been a trade, sadly. Because look how good of that trade that would have been. You don't even have a channel to make here. If you ain't got a channel to make, you ain't got a trade to make. Because by the time you had a channel, it skipped out of it. All I do have here, top line, you wouldn't have made that trade. At least not on a channel system, you wouldn't have. No, and see, at that point, you'd have probably had this channel working on your chart. You might have been doing day trades or something off an intraday channel, but off that 60-minute chart, you wouldn't have been trading that. Yeah, you got failures on it. Not a good channel. I can tell you right now, I don't want to trade channels on the 60-minute chart because you got a downwards channel here. That's saying, I need to wait for puts. And then it moves 10 bucks, 8 bucks. I want something that gets me that 8 bucks and not makes me wait for it to come all the way up here. And now, okay, I'll play the puts. Watch what happens to my puts here. Okay, that's not so bad. Back above the 50% line. But I've already missed 3 really big trades based on no establishment of a channel. Here's a calls trade. And you stopped out of it, only to wish you hadn't the next day. And now it's not going to give you a good channel to use. You need a down move to establish a channel. Okay, so I might have had you in that one, and you stopped out of it. Yeah, Richard, the reason I said that is I was watching and keeping track of the moves on every single trade that was made there. And even though some of them were less than $4, Some of them are way more than $4, and the average of all the moves was $4. It was actually $4.29, which was why I said to use the $4. You see here, channels are not friendly. They're making you miss too much, at least for the 60-minute chart. You know, those channels do work pretty good on some of the shorter term charts. The channels we don't want to use on Facebook 60-minute chart. It's not doing it. Now, the only other one that I'll go over real quickly, I showed you real quick of the fib extensions. They just don't add up right. The channels are making you miss too many big moves. This would actually result in less trades. Just so you know, it would be less trades. But sometimes less trades is okay if they have a higher winning percentage, right? We'll look at a W pattern. Not trading off the bottom, but trading on the break. Highest close at the start of the fall. It's consolidating. It started the fall, and this green candle was the highest close. $2 move. Where would you be looking to buy that again? On the retest of the W. It didn't retest the W. So you're waiting. Sadly, you just keep waiting. Oh, you know, off of this bottom here, we would actually, no, we'd have to make it here. And we'd be targeting this. We're not in anything yet. Not in it. I am sorry. Here's an M pattern. And the highest close at the start of the rise. Yeah, that'd have been a winner. All this is M's and W's. That's all I'm looking for. You could have got a little more, but oh well. Oh, on that one, no, because there wasn't enough room to the low. It would have been if there was a dollar move to make, but options are a game of dollar. You didn't retest the center of the M. And by the way, I've got this marked because that's another W breakout. That would have been better if it was actually an M. There's a W. Target, highest close at the start of the fall. I sold that one. These, by the way, it's all short-term momentum. You would trade a week out or 2 weeks out, not the same week that you're in, but Hit the target. Ooh, I just retested on my W. Broke the target, nice. Retested the target. By the way, this would be an all new buy on a bigger, longer term W. And sadly it failed. But we had the one huge win. And of course, then it does that to you. It's okay though. Let's see, do we get an M? We gotta take all these out. Give me an M. There's your buy. And your stop out. And your pissed at the world. But not so mad. That was a W break, but man, you gapped way above it, and you even gapped above your target. It'd be hard to buy that one and call it a W. It really would. So I'd have to say if I was only trading W's, it's not really a W, which sucks because then it did that. But on the failure of the M, you're buying again. That's not really a W, that's just a range break. Might have another M. Yep, there's another M here. Yeah, see, that's just a range break. So the M's and W's, when they come about, they're okay, but really the M's and W's just relate to range breaks. I've gone over a ton of them. So we wouldn't want to just focus on M's and W's. We might want to focus on range breaks. But you know, as far as the 60-minute chart goes, we do enough strangles and stuff off the daily chart for Facebook that we might just want to go with those swing points and trade the single direction. And that might be the better. 28 wins, 8 losses. And it was a very easy to follow system. It's horizontal lines on your chart. So I think as far as what I'm seeing on the 60-minute chart, swing points are it for Facebook. You know what that means? Anybody know what that means? You should say yes. That means to start looking for alerts based on swing points on my 60-minute chart for Facebook.